Welcome back to another episode of Compliance Insiders. I'm your host, Roger Fendelman. Thanks again, as always, for joining us. With me today, Scott Rein, president of Barry N. Rein and Associates, financial institution consultant specializing in internal audit and consumer compliance. Yes, I am reading that. Scott, your business for over 30 years has been doing internal audits for banks and credit unions, ranging from 20 million to 5 billion in assets. So it's a great group of people to be thinking about today. They don't always come up when we talk about IMBs and the like. And so your feet are on the ground. You're speaking to a lot of your customers daily, and you're even
Right.
doing helping clients with regulator audits and that type of thing that are going on during the pandemic. So I know we've been talking a lot lately, and you've got a lot of good detail to share with us. I think I'd like to start really just asking the question, how are community banks faring in the current environment?
Roger, it's been very interesting for these banks. It's just like any business that's trying to operate during this pandemic. There are struggles, there's limitations, but overall, I would say that community banks are doing a fairly decent job facilitating the needs of the customers, the regulators, and actually staying afloat during this pandemic. Uh, Early on in this, as we know, the government identified what we would call essential businesses that need to be remain open during the pandemic. Banks, financial institutions, savings and loans, national banks, credit unions all fell under that category. So one of the early steps that the banks uh, took on was to close the banking floor to customer traffic. What that did is that protects, of course, the staff members, but as well as the customers. So to offset the fact that customers could no longer come into the banks, they instructed customers to do as much as they could using online banking, which most of us utilize each day, bill pay online. If they need cash, ATMs are still functioning. And if they need to actually go to the bank, a lot of the needs can be facilitated through the drive up, the teller lines that we all utilize, and most branches, most bank branches actually have. So that limited the actual customer interaction with staff members, keeping that good social distancing that the government has really been saying is a best practice, which I certainly agree with. So community banks are an interesting animal in these situations. We all think of banks as Chase, Bank of America, Wells Fargo, thousands and thousands of employees, millions of customers. So now let's talk about the community banks that are limited on staff. They have anywhere from 50 employees up to a couple hundred. Their
Right.
departments are not as deep as some of the larger banks. An accounting department may have only 3, 4, 5 people in it. A lending department might have only 10 people in it. So what do you do in a situation where you have only 3 or 4 people in a department to facilitate the actual operation of the bank? What the banks have done is most of my clients have broken down into what we call an A to B team. So you've taken those, you've taken the staff members and you've separated them into 2 different groups. And
Hmm.
those groups work opposite from each other. So what that means is you'll have, say, let's call it the A team. You'll have 2 members on an accounting department working in the bank for, call it, a week or every other day. And the opposite team, the B team, while the A team is working in the bank or from home, will be working the opposite schedule. So while one group is in the bank, the other group will be working from home. That keeps a safe separation for possible cross contamination of a coronavirus or any other pandemic that's going on, and keeps the function and the operation of the bank going, which is important.
Right.
So that way we can keep the business continuity going, which is critical for a bank to facilitate the customer needs.
Well, that's interesting that they're doing that because it creates opportunity, but it can definitely create some challenges, especially
Sure.
for example, if we're talking mortgage origination, timeframes and getting the work done. But you had mentioned that going beyond that, from an accounting perspective, that can be a challenge as well. But also I'm tying a lot of concepts in here together. But one of the other challenges that goes right along with this is, and you'd mentioned this already, um, community banks don't always have the large staffs that other types of entities or financial institutions have. And so they have to make do with what they have. So tying that all in together, they're still making it work, but how is that all working out?
Well, my fingers crossed. It's working out pretty well, um, mainly because of technology. That most of the departments of a bank are able to function offsite, and that offsite location, typically, like most of us, is at home. So what the banks have done or tried to, for the most part, is issue bank-owned computers with their software, with their security settings on there that they can work from home, whether it be a PC or laptop, and still dial in. I know that's old terminology, but connect in to the bank's network. And on the bank's network, which keeps most of their information, whether it be policy, procedures, accounting information, uh, loan applications, they're still able to tap into that information from home, and by doing that, keeping them safe, while still continuing to be able to do their job remotely. So that is probably the greatest technology has really been able to keep businesses, but specifically banks, remain in business and functioning and going, until we can all get back into the workplace in a safe way.
Well, that's really the crux of the question, which is are community banks as agile as some of the larger competitors are in terms of technology? Can they successfully do the work from home model? And you had mentioned as well that just in, every situation is different. There are some situations where people working from home are using their personal computers. Is that right?
I would say that, obviously this came on all of us pretty quickly. So if a bank or any business did not have the technology in place ahead of time, it's really tough to come across that now. If you want to buy computers or any sort of equipment, there's back orders, and it's tough to get stuff quickly. So in some situations, the banks have had to take a risk and allow people to tap into the bank's network from their home PC. And what are the vulnerabilities there? Your vulnerabilities are, what are you using to connect to the internet, whether that be a service provider like Verizon or Comcast, or what type of computer are you using? If you're using your home PC, do you already have malware on there? Do you have a child or a family member that potentially could be using this for their own personal use and clicking on malware, which all of a sudden infects the computer with a virus that could potentially harm the bank's network? So going forward, once we get through this, something that any business, but specifically banks, will have to do is make sure that there's security settings in place and protocol to make sure that if you're using a home PC, how is the bank's network protected? How is the customer information that's on the bank's database protected? And that is something that is a concern that we're dealing with every day, and we really won't know the answer to and what the best resolution will be until we get through this and get back to a sense of normalcy.
Right. And to tie this together, when you look at the potential, and I do say potential because it doesn't mean there's a data breach. It just means there's a potential for it and it might be increased.
Sure.
You have that combined with, from a compliance standpoint, especially, some things may or may not be falling through the cracks. Everybody from the CEO to the CCO to head of operations, the COO on down, have had to shuffle the decks and reprioritize. Doesn't matter how big or small of an entity you are,
Sure.
and focus on the things that are going to allow them to survive and best serve the customers. So, for example, if there's a little bit of forgiveness on, and you'd mentioned this as an example, on getting the LE out in 3 days, okay, I guess we can see that. But when you look forward a year, 18 months, 24 months, and you have examinations from your prudential regulators,
Sure.
you have issues that might arise. And we can only speculate at this point. It's kind of fun to talk about, but we all, us compliance folks, keep an eye on things like this. How will your regulators react? So you're not getting an LE out in 3 days all the time. You're not necessarily decisioning an application within 30 days, potential COA issue, and on and on and on. But you are getting your critical reports out, for example. What are they going to say? I think we both think the answer, it depends. Never underestimate a regulator and what they might do.
Right.
However, If your excuse is, I didn't get all the loans decision within X period, X time because of the pandemic and because we were doing this A/B switch on the staff. If you're already reasonably well liked by the regulators, in other words, if your exams in the past have gone reasonably
Sure,
well, maybe they'll be a little bit more forgiving. Also, for those who are examined by state regulators, there's a lot of variability there, and it depends on
sure.
whether the state's an activist state or it's a little bit more forgiving. But I think so. I think this is all great intel, and it's good to know that everybody's surviving and making it work, even with the shorter, smaller staff. One of the things we need to talk about, Scott, is disaster recovery, BCP, and how that is evolving because of the pandemic. And you have a lot of good info on that. So tell us a little bit about your perspective on that.
Sure. Our firm over the years has written many disaster recovery plans, and that ties right into BCP, business continuity planning. As part of business continuity planning, you talk about scenarios of what would cause the bank to not be able to function, and and usually, typically, you talk about scenarios such as a power outage, a bank robbery, a fire, of course, September 11th, but we've never really dealt with anything quite like this that has gone on this long. Everything that I just mentioned, if you have a power outage, the bank would be out for a couple days at the most. And what would happen in that situation is if one branch is down, you'd instruct customers via the website or even a simple sign on the door if you need to conduct your business in the actual bank rather than utilizing the online systems that are in place, such as online banking or ATMs or bill pay, then they would just instruct you to go to another brick and mortar location that they have. Simple as that. But now you're talking about something that is not just regional or national, you're talking about something worldwide. So you're talking about something that affects every location that a bank has, and you're talking about something that has been going on for such a long period of time that's unprecedented. So what does that tie into? That ties into pandemic planning. Pandemic planning historically has always been part of business continuity planning. It's been a scenario with a disaster recovery plan, but never this long. So going forward, what I believe that financial institutions of all sorts are going to have to do is have a much more in-depth, detailed pandemic plan. Now, the crux of that is in a typical disaster, that would be a backup site. A backup site usually would be another bank-owned location, whether it be another branch or a separate office location that was not necessarily maybe in a different power grid or a different location, where staff would be instructed, hey, look, there's an emergency at the main office. Go to the backup site to do your work. And that backup site usually would have terminals, computers that are already connected to the network. So somebody would be able to do their job just from a backup location that was usually owned or rented by the actual bank. In this situation, you're talking about something that is across the board here. So we're not just talking about one bank location, we're talking about every location. So most people in most businesses, but also specifically banks being in central business, have been instructed to work from home. So in the past, as a firm, we've always tested a disaster plan. We've tested a business continuity function to make sure that it's adequate for the institution. In this case, by going to a backup site and actually testing it there, we go through a testing matrix, which has all the job functions for an individual to make sure that they can do all of their job functions from a backup location. Now, that is usually tested annually. The first conclusion that I've come to is that the testing not only is going to have to be done more frequently, so not annually, maybe quarterly or even monthly, but that the testing will actually have to be done from the individual working from home. So that is the big difference here. So instead of when we do a test, hey, we're doing a test tomorrow, you have to go to the backup site to do your job for the day. It's going to say, stay at home and try to do your job from home. And we don't just test their functions. We want to make sure that they have the right equipment. Maybe supplies, simple as a pen and paper and a stapler for that matter. We want to make sure that they can do their job to the full extent from whatever location that is. With a pandemic plan and a business continuity plan that ties right into a pandemic such as coronavirus, we want to make sure that they can stay home and do their job. So I believe that financial institutions going forward will have to make sure, even if they have to open their pockets and spend a little bit of money on it, they're going to have to make sure that their essential staff members are properly equipped to do their job from home. Whether that means having set up workstations, bank-owned phones, whether that's simply having a copier scanner off-site, or whether it's paying for a secure network for them to tap into, such as their virus software, or paying for their internet access, for that matter. That's going to have to be part of their pandemic planning going forward.
Right, and those are good points, and I know there's a lot of talk about cross-training as well, and
Yes.
that's something that you're a big proponent of. So you see that coming. I think a lot of people do. So I think that's going to be important. You gave a great example about perhaps training somebody in operations to handle an accounting function, because if you only have 3 or 4 or 5 people in your accounting and they have daily reconciliations, well, that's a challenge, isn't it? If you have some, and that was a great example you gave. There could be an illness that wipes them out, and that could potentially put you out of business, or shut you down temporarily.
The limitations that community banks have compared to the larger banks, technology is much more reasonable than it has been in the past. You can get your hands on the same technology that the larger institution or larger corporations use and a community bank can do that by, purchasing computers and hardware and software at reasonable cost. The big limitation that they have is staffing. They're just not as deep with the number of people that they have. So if you have a situation that people are incapacitated, cannot do their job, you might run through the total number of staff members to actually facilitate the job and operation of a bank. So to your point, when you're talking about cross-training, even though I use the accounting department as an example, because that is the most time sensitive in terms of recovery. You cannot have an accounting department for a bank down for much more than a day.
Yeah.
So if you have a small staff in an accounting department and you have multiple individuals down, there needs to be ample cross-training from other departments to back up those people in the event that people are incapacitated and are no longer able to do their job.
Right. Good point.
But cross-training will be a big proponent going forward to the successful continuity of a financial institution, certainly.
Right. People are going to have to figure that one out. There's going to be a lot of work there, but we've got a lot of time to do it. Scott, thanks so much for being here. This has been fantastic. Great info. Love to have you on again.
Are you a compliance insider? Then go to compliancepodcast.com immediately and join our mailing list so you never miss an episode. Got something to say? Request to be on the show. Go to compliancepodcast.com with your topic ideas. And as always, thank you for listening.